What is weighted average costing and how is it used? Well, weighted average costing is a method of assigning your average cost of production to a product. This would be compared to assigning your actual cost incurred or a standard cost incurred. That is, you're taking the weighted average of cost across, again, the production cycle to assign it to a particular product, right? Based upon some allocation base that you've identified. Now, what's the formula for this? So one, you look at the cost of goods that you have for sale, and then you divide it by the number of units you have per sale. Well, this is going to give you the average cost per unit, okay? Now, that being said, the way you calculate your cost of goods that you have for sale, you just take your starting inventory, the dollar value on one hand, and then the number of units on the other. For the dollar value, you add the dollar value of any purchases during the period, okay? And then for number of units for sale, you add the number of units you've purchased throughout, okay? And then you would take this figure, this is the cost of goods for sale, and then the number of units for sale. And because it's the total number on both sides, you divide one, cost of goods, by the number of units on the other, and that will give you the per unit average, okay? And then you can use this to, again, assign, that by its very nature has, in effect, assigned the cost to the individual unit because you've taken the total cost divided by individual units. All right. Now, when do you use this? Well, when inventory is so intermingled that they're not distinguishable in nature and you can't assign cost to the individual product itself, you take the weighted average, right? That is the most efficient approach. Lots of times in inventory management systems, you'll track last in, first out, or first in, first out. With costing, you can do the same thing. You can, generally there's not a last in, first out when it comes to costing, but there's certainly a first in, first out, or actual costing, if you can identify the specific cost associated with a given unit. Well, this is an alternative to that when those methods are too difficult, okay? And if the inventory itself is commoditized, they're all fungible in nature, they're all the same, so it makes sense not to try to attribute cost individually to each one. You simply take the weighted average across all of them and assign the cost in that way.